Hi there, Clint Weeder here with McMill CPAs and Advisors. Also have Andrew Steffensmeyer here on the line. We thought it would be a good deal to do one final review of the employee retention credit. We've been getting some more questions on this. Also, there was recently some more IRS guidance that was released on some of the nuances with the credit. So we thought it'd be good just to do one final review, hit on just the overall basics of the employee retention credit, and then take a deeper dive into those nuances, whether it relates to full or partial government shutdowns, and then also with the supply chain issues. So here's just a quick agenda that we'll go through here today. So let's do a quick overview of the employee retention credit, touch on eligibility, full or partial suspended entities and how that impacts you. Convergence with the PPP, documenting, and then we'll have a little fun at the end with a little fact or fiction.
Thanks, Clint. Yeah, again, my name's Andrew Steffensmeyer, CPA here at McMill CPAs and Advisors. So like Clint said, we're just trying to round out this employee retention credit. It's been around for a couple years now, resurfaced back in 2021. So we're trying to make sure everybody, one last swat at our clients to make sure if there is anybody that does qualify, these are the qualifications, and this PowerPoint will be something you can refer back to. So I'm going to take us through the overview of the program, some of the basic details. So the employee retention credit, this rolled back all the way back when the pandemic started, which seems like forever ago. So this credit's, been around for, 2.5 years. So back in the beginning, it was not a popular credit because, right when the pandemic started, you could either do the ERC or you could do the PPP. And so really the ERC, everyone took the PPP route because at that point it was going to be much better for our clients. And that's the way it was until late 2021, where the IRS and, regulating bodies came out and said, if you did take PPP, you could still do the ERC with any, unused payroll is a good way to think about it. So this ERC became popular end of 21 and then, all the way through 2022 now. And it still will be in existence for, at least 2 more years for the most part. So no rush on this credit, but we want to make sure that everybody is aware of it. So the first point here, yeah, it's a refundable payroll tax credit. So it's based on the payroll taxes that you paid in for your employees that you retained. So, employee retention credit. This credit's looking to see, did you meet certain criteria and keep people on staff? And so, again, challenges posed by COVID-19, and you kept payrolls, you kept your payroll going for the staff that you have, you'd be eligible for this credit. So again, available to all our private sector businesses, even some nonprofits. So, we'll have a slide on that view here just to show which entities qualify. But for the most part, all of our clients would qualify. We just have to meet certain requirements. And again, the number of employees does not impact if we can take the ERC. So we'll go through that a little bit more too. So who's an eligible employer? This starts to begin the process of, do we qualify for the ERC? So the first test is, did we have a significant drop in gross receipts during any quarter in 2020 or 2021? So the calculation depends, or 2020 is not as good as 21, so that calculation is different for those 2 years. And we'll go through what thresholds you have to meet. So the first test is, did you meet this drop in gross receipts, much like the PPP program? If you don't meet those thresholds, then you can still take the credit if your income didn't even go down, but you were fully or partially suspended due to a government order. So that's local, federal, could be the mayor, just depends where you're at. So all types of different government orders that could impact the business and let you take advantage of this credit.
Right, and that top one where it's the decline in gross receipts, I think we've done a really good job hitting on that with everybody, because that one's a really easy one. It's black and white. versus the bottom one with the full or partial suspension. There can be some gray in that, and that's where we've gotten some additional guidance from the IRS, which we'll go through here later. But so yeah, we'll be, like I said, honing in a little bit more on that bottom part there.
And again, that, decline in gross receipts, I mentioned that it's the same process as PPP was. So, all we're doing is looking at, did we qualify in 20? So we're looking at quarterly 2020 financials and comparing it to 19. Or if we're trying to qualify for 2021, look at those quarterly 21 financials, compare it to 2019. So we're always comparing back to pre-pandemic times to see if we did have a drop. So we did touch on, it's going to look different depending on what year we're trying to qualify for. And so if we're trying to qualify for a quarter in 2020, well, that gross receipts test, we would have to have a decline of 50% in one quarter in 20 versus 19, which, is tough. That's a huge drop in gross receipts. So we feel like, most of our clients, they know that, and we know that if you would have qualified in 2020. Now, 2021 is saying, they did ease the requirements to qualify for the ERC. So now that drop in gross receipts only has to be 20%. So a lot easier for clients to qualify in 21. And also the employee retention credit, if we qualify in 21, is a much better benefit for you all than a 2020 credit. So yeah, we'll just kind of talk a little bit here just on, gross receipts there's just a few caveats on gross receipts on, what qualifies and what doesn't. First two paragraphs here, this looks at, well, what if you weren't in existence for 2019 to compare a quarter in 21 versus 19? Well, there's some special guidance here that we can always do for you. Really, it comes down to you're trying to annualize what that quarter would have looked like based on the data you have. And really the most important piece on this slide is that special rule for startup businesses. So the ERC was complex enough, and then, a little bit after it came out, there was a specific rule in there that said if you started a business in 2020 and, you had employees, well, you would qualify for this startup business, and there were very gracious rules for that for clients. So if you started a business in 20, let's definitely make sure we take a look at that and see what those benefits would be. And I guess another caveat on the special startup businesses, they're eligible for all 4 quarters in 20 to qualify and all 4 quarters in 21. So the reason why that's important, for everyone else that was not a startup, nobody can qualify for that 4th quarter of 21 except these startup businesses. So again, another nuance in the rule, but we need to go over that.
Perfect. All right, I'll take the lead here talking about fully or partially suspended, what that all entails. But before I hit on that, just so it's clear, you can qualify based on either or. It's either the drop in the gross receipts that Andrew just talked about, or this fully or partially suspended. So if you have the fully partially suspended but don't meet the qualifications under the drop in gross receipts, that's okay. You just need to meet or one or the other. So fully or partially suspended, so kind of goes through that student orders from the federal or state government limiting commerce, travel, and group meetings due to COVID-19. And one thing that's kind of come out of that is also in special circumstances, supply chain issues can qualify if those supply chain issues are caused directly or indirectly by a federal or state government fully or partially suspending them. So we'll have to look at that. We'll talk about that here a little bit more later. So in the case of this, it could either be a full cease of all operations, or the business can continue to operate with some but not all normal operations. So easy example there would be like a restaurant. Most of the restaurants in the area early on in COVID had to shut down their front doors. So that shut down that piece of their operation. However, they could still do deliveries, carryouts, whatever. So there's different things you have to look at. So when you're looking at your business, don't just look at your business overall. You got to look at every segment or division of your business to see if somehow that portion of the business was impacted. So if you can reach that conclusion that a portion of your business was impacted, then the next thing we have to look at is it more than a nominal portion of your business operations as a whole? And so the next slide here, we'll kind of hit on that here a little bit more, what that nominal really means.
And yeah, you bring up a great example with the restaurant. So even, I know we had different clients that qualified different ways. So a restaurant, like you said, even if the shutdown order said you can only have 75% indoor seating, that qualifies us. So just different, any kind of business. I know we had some daycare businesses that said you could only take a certain amount of kids during this certain time, and that qualified. So those types of lines of thinking for shutdown orders.
Absolutely. So more than nominal. So to kind of take a deeper dive into that, just overall looking at your business, the bright line or safe harbor test, as I would call it, that the IRS has come out with in the recent guidance is that portion of your business accounts for at least 10% or more of your total gross receipts. And that's determined by using the gross receipts in the same calendar quarter in 2019. So you kind of got to look at it no different than your overall gross receipts that Andrew talked about earlier, the drop 20% or 50%, depends on which year. You look at that portion of your business in 2020 or 21 and compare it back to 2019, that same segment of your business, to see if it had 10% or more of your total. So, and then also, just overall, looking at the nominal impact, that's really, I would consider that a pretty gray area. The IRS still hasn't issued a lot of guidance on that. But even though if you can determine that business segment is 10% or more of your total overall operations, the nominal impact from that government order shutdown doesn't necessarily need to reduce your net income or your total gross receipts, but you have to be able to prove that that's either was a supply chain issue caused by a full or partial shutdown on their end, caused your business to have to change operations in a more than nominal way. So whether that be hiring additional people to handle certain things, or people had to be shifted throughout your business, there's different things that you can take a look at. But just overall, you got to really sit down and rack your brain. Was I directly or indirectly impacted by COVID, a full or partial shutdown, either myself directly or one of my suppliers, indirectly then to me? And then did that have a more than nominal impact on my operations? Right.
Yeah, and I know we've seen a few times where, really this gross receipts test, we're just trying to find 10% of our business. We're trying to make sure it's that nominal impact, is it a significant enough portion of our business that is affected? It's not like it has to drop 10%.
Right.
And also, I know, back to the point where we have to prove things for the ERC that, it did have an impact on our business. Your revenue could have gone way up, but, we know that inflation has affected pretty much every cost that we have. So, our gross receipts probably went up, but our net income for the business after expenses probably didn't go up if we have inflation. So just a few other things, it kind of goes back to, how are we going to make our case if the IRS were to audit this? We just have to document those things in our file.
Absolutely. So to put a little more specific definition behind the governmental authority, the order that comes from the government, it's either federal, state, or local, and Andrew kind of hit on that earlier. I would say for the most part, on the federal side, those are more broad stroked and not very specific to location. So for the most part, 95% of the time or more, you have to look more at your local or state orders to see if you qualify for this. So most of the time it's going to be boiled down to, like Andrew was talking about earlier, the mayor shutting down specific non-essential businesses in town, or the state telling restaurants to shut down, shut their doors, or whatever it might be. So normally we're not looking at those federal orders, it's more looking at those more specific local orders. And then just, Andrew hit on this earlier too, just to make sure that everybody's aware of this, with the PPP and ERC, initially, If you got the PPP, you can use that. Then also use the ERC for 2020. That later got changed in 21, so you can still go back. However, you can't double dip on those wages. So if you use, let's say for example, 100,000 of wages as part of your PPP forgiveness application, those $100,000 worth of wages are gone and cannot be used as part of your ERC calculation. So when we're going through these, one of the things that we will need is your forgiveness application that you filed with the local bank or whatever bank you used, so that we can make sure we carve out those wages you used during the cover period of the PPP loan. So that's an important thing we still need to take into account.
Right. Yeah, so for a real life example, like Clint was saying, 100,000 if you use that for PPP, but in a quarter you had 300,000 of wages. Well, then that gap of 300 minus 100, that $200,000 gap of wages, non-owner wages, non-owner family, we could take those for the ERC. Right. So keep that in mind.
Yep. All right, just to hit a little bit on documenting and claiming the credit here. So the claim the credit, since these are related back to 2020 and 2021, we'd have to go back and file an amended 941X for each of the quarters that the business would qualify. So we can go back and do that. And then for the claiming deadlines, it's a 3-year statute, no different than any other tax return filing. But the one unique thing here is that all the quarters in a given year are treated as if they're part of that entire calendar year. So for example, for 2020, all those quarterly 941s are treated as if they were filed in 2021. So then those don't need to be technically amended. Then the 3-year statute would run out in 2024, the beginning of 2024. So we have a little bit of time. Obviously for 2021, then it would be the beginning of 2025. We would need to have those 941X amended returns filed. And then documentation, I don't think I can harp on this enough. If anybody was ever to get their ERC audited, they would definitely come back and ask and want documentation approved. Now, like we talked earlier, the reduction in gross receipts, that one's black and white. That one's pretty easy to prove. We have in our file, the QuickBooks reports, whatever financials we have, showing those quarterly reductions in gross receipts as compared to 2019. So we can document that in our file, and that's what we've been doing. But when it comes to those full or partial government shutdowns or supply chain issues or whatever it might be, I think there needs to be a lot more documentation in our files showing how we arrived at our conclusions. So you'd want to document exactly what governmental orders you're relying upon for the full or partial shutdown, and then also just detailing out, the nominal impact on your business to prove that it's more than a 10% portion of your business, and then also how that business was directly or indirectly impacted by a full or partial shutdown. So I think all those things are important to make sure we have in our files. And a lot of times, especially with the full or partial shutdown, I think you almost need to write a memo or a narrative, couple-page document just explaining your rationale, because I can guarantee you here in 2 years or 3 years, whatever it might be, if you were to get audited, it's going to be really hard to remember exactly how you arrived at each of those conclusions. So it's just so important to journalize that down and have that in our files.
Right. I know, just a real life example, it's even hard to remember what the beginning of the pandemic was like. I know we all went through it, but you just forget all the things about the pandemic and how it's going to affect your business. So that memo just puts into writing what, how you were feeling, how the business was going, that sort of thing.
Absolutely. All right, now we're just gonna have a little bit of fun, kind of hit on some of these things that we talked about before and test our knowledge here a little bit. So Andrew, I'm gonna test you here on a little fact or fiction. So first of all,
I've been preparing.
Everyone qualifies for the ERC, fact or fiction?
Yeah, we would say fiction. Again, we went through those 2 qualifications. We're gonna see, do we hit the gross receipts test? If not, do we hit the government shutdown test or limit orders? And we just have to see if clients are going to qualify, and we have to feel good about qualifying. You know, if it feels too good to be true, probably is, because I know a lot of our clients, you know, we've looked at it for a lot of our clients, but I know they're getting approached by outside firms, out-of-state firms, that sort of thing, that specialize in this ERC, and there is quite a bit of money in it, so we're trying to, you know, let's pump the brakes and make sure this actually makes sense.
Absolutely. All right, number 2, federal government orders alone can be relied upon.
It's going to be another fiction, like you told us. Not just federal. We need to look at state, local, city, whatever other government order we can find. Federal is not going, you know, obviously that depends where you were at. A lot of states treated COVID differently from a shutdown perspective.
Absolutely. All right, number 3, any supply chain disruption qualifies for ERC.
I think a lot of people would like this to be fact. That would also be fiction. This is obviously not true. We need to make sure, we need to go back to the first requirements. A supply chain disruption is not just a supply chain disruption. It has to be impacted, or it has to be caused by a government shutdown. So how easy is it to trace back that supply chain issue to a government shutdown? It's not just if you have a supply chain disruption, then you're good. You know, here at our firm, I'm sure it was harder to get some of the, you know, supplies that we have. You know, obviously we don't qualify for a supply chain disruption and having it be a big enough impact. So.
Yep, I totally agree with you on that one. I think you got it, like you said, you got to look through to whoever you're getting your supplies from to see if they were directly impacted by a full or partial shutdown. But then the other requirement, just to kind of get a little bit more into the weeds, you still have to be able to then look at, can I get that supply somewhere else? So if your normal supplier was directly impacted by a federal shutdown, that may qualify you. However, you are supposed to also then look to other suppliers to see if you can get that same product or whatever it is from there. So if you can't get it from anywhere because of the government shutdown, then in that case you could qualify due to the supply chain disruption. So if, like we talked about earlier, you really have to document and prove that you're going to meet each and every one of these requirements. All right, owner and family salaries are includable wages for the ERC calculation.
This is false. I wish all my tests were this easy. I got 4 for 4 so far. Back in the beginning, we should have started with, you know, the ERC, you have to, you know, all those different qualifications, but you have to pay W-2 wages to employees that are not yourself, your family, your direct family below or above. Anybody in your family silo is not included in the ERC. So if those are the only wages that you're paying, the ERC doesn't matter to you because you don't qualify. So these are only, you know, arm's length employees that you're hiring or have hired. Only their wages are counting, no owner family.
Perfect. All right, next one. Deadline for claiming the credit is January of 2023 here coming up.
Another false. This is a fiction too. You just went through it. So 2020 is going to be due in January of 24. So don't feel like you have to get something ironed out right now. You know, we should, if you have all the documentation ready, you know, let's file it. But, you know, right now we're October of 22, so we have 14, 15 months until 2020's, you know, payroll returns have to be amended. Obviously, if we're trying to qualify for 2021, we have till January of 25. So, you know, 30 months away or something like that. So we're good.
Perfect. All right, hit you with a lot of fiction. If we can change things here a little bit. Penalties are large for improperly claiming the credit.
This is true. You know, penalties can come back on us as a firm, can come back on client. You know, just because if the IRS were to audit you, and Clint, I know you know the penalty percentage is a little bit better than I do, but if they were to audit you and they decide that this ERC was fraudulent or it was claimed inappropriately, well, you know, you're getting paid out in 2020 or 2021, and they're not going to find this for maybe 2 or 3 years after. And so interest on all that big chunk of cash they gave you, interest and penalties is going to be a big deal if they decide it's not a true claim.
Right, absolutely. And the penalties can range all the way up to 25% of the refund that you receive. So I know I got a lot of folks that are, that may have taken this, that are putting it to the side just in case. But I mean, once you factor in the fact that you got to go back, and we really never talked about this, I guess, is, if you do qualify for the ERC, not only do you, need to file the amended 941 to claim the credit, but then you also need to go back and reduce your wages that you use as part of the ERC and amend your federal tax return. So then you'll have to pay a little bit of tax there. So there's a net benefit. So you got to look at the net benefit between claiming the credit and then having to increase wages. But yeah, I mean, you got to take a look at this overall, that make sure that the risk you're taking, if you're in the gray area and you want to push the envelope on this, is it worth it with the penalties that could be applied and the fact that you still got to go back and amend your return anyways for the increased wages that you can't claim with the ERC. So it's something that you really need to take into account and make sure it's worth the squeeze, if you will.
Right. Good thing to mention, just because it's not like PPP. The PPP, if it got forgiven, there was no tax implication on it. It was all quote free money. ERC is not that way. So anything you receive for the ERC is going to be taxable no matter what. And like Clint said, if we qualify in 20, we should amend the 2020 payroll forms and also amend the income tax return and the shareholders for the year that was qualified.
Yep. All right, last one on here. Anyone can process ERC claims.
This is technically a fact, but we all know it's fiction. Anybody could, amend your payroll returns if they are claiming that you can get this $27,000 per employee benefit. Is that a good idea? We would say no. And so if somebody approaches your business, one, let's make sure that you qualify. Let's see if we meet the gross receipts or shutdown test. Two, let's make sure that the firm, I know we've had a few clients that are a little bit more specialized, meaning they're part of a bigger chain of companies. So sometimes those trade groups that you're in for your specific business have a, ERC person that you can go to because they have all these government shutdown orders. They have your, supplier information, your gross receipts, what sector of the business it's in. Sometimes those are great resources to get your ERC done because they have all that information. Whereas, us at McMill, we might not have all that information. And so, if you decide to have your ERC done by someone else, let's make sure it makes sense and that whoever is completing the ERC is going to be available if there's a question 3 years down the line from the IRS. And also, do you feel good about the process when you're going through it?
Right. No, absolutely. I think it's really important to make sure that firm that's assisting you is a reputable firm. And then, like Andrew's saying, to make sure that I think number one or number two after a reputable firm would be, are they going to support you in case if there's an audit? Because there are different boutique ERC firms out there that claim that they can get you these huge refunds and you definitely qualify and everything's rosy and everything's great. But then on the back end, that they're not going to support you at all 2 or 3 years down the road if you were ever to get audited. So it's always taking a look at the whole picture, taking a step back, and yes, this sounds really good up front, but what are the strings attached here, if any? So we just want to make sure you guys are taken care of. Like Andrew said, there's certain groups that are part of some trade organizations that have really great resources and that can help you better than what we can. But like I said, we just want to work with you to make sure, one, it makes sense to do it, two, they're a reputable firm, they're going to take care of you.
Right. And I know some of these boutique firms that are doing this, let's just make sure, like the fee arrangement sometimes can be a telltale sign a little bit. So, are we charging like a per employee head? I would say that's very common and that's a good thing. Are they trying to get 40% of the credit as a fee? That doesn't feel as good. That doesn't feel right. So we just, what's the structure for payment? Doesn't make sense.
Right. Well, awesome. Thanks for playing a little fact or fiction with me, Andrew. I think that was fun.
100%.
I'll give
100% for test.
I'll give you a passing grade on that one. So, well, thank you everybody for taking a listen to this. We're gonna be sending out this recording to everybody. Don't hesitate to reach out to us and ask us questions. I mean, the whole reason why we did this, like I said at the beginning, was just to do one final review of the ERC to make sure we're not missing anything for any of our clients, and also just to kind of bring this back to the forefront of your minds. It feels like it's just been a really busy couple of years with everything going on. And we also want to make sure anything fell through the cracks. So just kind of rack your brains, kind of refresh yourselves on everything that happened during COVID and after, how it impacted your business, taking a look at the separate segments of your business to see if it was more than a nominal impact to more of a nominal portion of your business. And give us a call or email us with any questions so we can just do one more dive into your business if we need to, just to see if you qualify for this ERC.
Yeah, again, like Clint said, thanks for joining us today. And yeah, we're here to help all our clients out. So, whether it's us doing the ERC or if you have another reputable firm doing it, let's all be in communication. And yeah, if you qualify, let's file for it. So
awesome.
All right. Thank you, everyone.
Take care.